Edelweiss Mutual Fund has come up with a new fund offer, or NFO. The name of this fund is Edelweiss Business Cycle Fund. In this video, we'll talk about this fund, understand its theme and investment objective. We are confident that this information will help the investors about this new fund's objective and its future potential. Most of the information for this fund has been taken from the new fund offering document. If you like content like this, please feel free to subscribe to WealthAbhi. The entire industry can be bucketized in several sectors like energy, financial services, retail, automobile, consumer durables, FMCG, and many more. Each of these sectors go through its cycle of full recession, early recovery, full recovery, and early recession. These cycles can spread over several years. Several macroeconomic reasons drive these cycles. The cycles rotate over every year and the sectoral yield varies. While the broad market Nifty shows an average CAGR of 15%, the sectoral yield can vary between 110% to minus 50%. Most of the broad-based indices and mutual funds miss this sectoral rotation. You can see the comparison of three diversified mutual funds. For the sake of confidentiality, the name of the funds are not given. However, you can see that the average allocation did not vary significantly over the years, and thus the funds could not ride over such sectoral rotation. So, timely identification of these sectoral rotation is the key for success in the stock market. The traditional approach to identify the sectoral rotation has a disadvantage. These approaches are slower than the market rotation and often lags in response. This leads to timing lag, which impacts the yields significantly. Edelweiss brings in factor-based approach, which is driven by the proprietary methodology, which can identify those stocks early, determine the trends, and make rule-based investment, which is targeted to provide higher returns. This model is being applied by Edelweiss in their investment decisions. The same was backtested against Nifty Broad Market Index and consistently provided outperformance. Edelweiss Mutual Fund will apply this proprietary investment model in their newly launched Edelweiss Business Cycle Fund. The investment strategy for this fund will focus on this factor-based approach to identify the business cycle trend. Once the sectors are identified, the stock selection will be made based on sound financials of the company and good corporate governance. The strategy will also consider market capitalization and will maintain equal distribution between large cap and mid and small cap stocks. The fund will be well diversified with a target portfolio of about 60 stocks selected from a broad market of 500 Nifty stocks. To manage the risk of over-reliance on a particular sector, the fund will have a cap on single sector allocation. The cap will be maintained at 40% and the exposure to a single stock will be restricted to 10%. The model was backtested and it showed substantial rotation across various sectors over the last 10 years. This can be seen in this heat map. This rotational approach showed consistent outperformance over benchmark Nifty 500 TRI. Edelweiss Mutual Fund expects that the same performance will be observed in its NFO, and thus Edelweiss Business Cycle Fund will outperform the broad Nifty 500 index in a significant way. Edelweiss Business Cycle Fund is presently open for subscription till the 23rd of July 2024. The minimum investment in this fund is 100 rupees in lump sum and any additional investment in the multiples of 1 rupee. This fund will follow Nifty 500 index as its benchmark return. Investors should also be aware that such strategy funds are always subject to market cycles and hence the return cannot be guaranteed. Any potential investor should not consider this as an investment advice. They should consult their advisor before subscribing to this mutual fund. They should also refer to the scheme information document. Edelweiss Mutual Fund provided details of this strategy in their SID and investors should refer to this document. Hope you found this video informative. If you liked this video, please don't forget to like it and subscribe to our channel. Also, press the bell icon to be notified of our future uploads.